Well, nothing really happened because the bond market was closed today, but we did have a huge reaction in the stock market. I want to talk about that briefly in this episode, and what we're expecting tomorrow at the opening bell might not be looking too good for the bond market. But without further ado, folks, let's get to today's news. So the bond market was closed, so that's why mortgage rates didn't really move at all. But if you go over to the stock market, well, we got back basically everything we lost on Friday. What happened was President Trump came in and he tweeted that he's going to add 100% tariffs to China. Now, we don't have a deal yet with China on tariffs. We thought it was kind of getting to a nice concluding end within that reaction. But over the weekend, he retweeted and said, no, it's all good with China. So the markets just got back to normal, hitting record highs across the board. So tomorrow, here's my expectations. The VIX is down, meaning anxiety level on Wall Street's down, and the markets are up across the board. So probably what's going to happen? People are going to move into higher risk categories. Let's see what crypto's looking like. Yeah, that's proven my point right through here. So they're going to move out of safe havens, and that's what happened on Friday, and that's what really pushed down mortgage rates. They're going to start moving that direction or the other direction come tomorrow. People are going to start pulling their money out of bonds and putting their money back into the stock market because it looks like this AI end is nowhere in sight. So let's get over to what happened in the bond market. Well, like I said, nothing because the markets were closed. You get over to the economic calendar for the week. We were hoping to get consumer inflation, producer inflation, the unemployment rate, and a whole bunch of other stuff. We're not going to get anything. So we're going to have to focus in on the data we get each day, even tweets on what the markets do. But on the FedWatch tool, Fed's meeting in 15 days. What are they going to do? Well, there's a 99% chance they're not going to do anything. It looks like there's a 95% chance they're going to cut at the next meeting. But you know, and I know, just because they cut doesn't mean mortgage rates are going to come down. So we're going to focus in on for that, especially this week. We have a slew of earnings coming out, especially bank earnings. So we're going to monitor those all week long. Really nothing today. Tuesday, Wednesday, Thursday is going to be a slew of them. We're going to focus in on how they are coming in with their earnings. The earnings keep coming in better and better and better. It's not going to be good news for mortgage rates and yields because people are going to add to their equity positions, meaning bonds are going to start taking it on the chin a little bit. So my expectations over the short run, we're going to see mortgage rates ticking up. We might see a big move tomorrow morning. Here's why.